My name's Tony Pollock. I'm a full-time trader and I have thousands of hours of helping others learn the skill of trading the stock market. And this is Mike. He is on his journey right now of learning how to trade. He struggles with the fear of losing money and moving his stop too soon. You're about to watch a coaching session that I did here with Mike to help walk him through how to overcome those fears around money and fears around losing on a trade and also moving your stop a little bit too quick. I hope you enjoy. I know this is going to help a lot of people because I know he's not the only one that struggles with these things. You talked about how you are scared to lose
Yep.
and you have a lot of emotions and kind of thoughts around that. You said it's a little bit more aggressive whenever you're winning on a trade. So if you're up
Yeah.
profitable on your P&L, that's when that emotion comes in even a little bit more. Yeah, expound on that just a little bit.
Yeah, because I will see that I'm up, or even if I'm not using the money, like if I'm not watching the actual account go up, I'm watching the candles. In my head, I know I'm up. And so as soon as that candle starts reversing, or I get some kind of reversal signal, whatever, then all of a sudden it's like, well, no, you need to grab what you can get. Some of the pie is better than no pie, and
Yeah.
uh,
Yeah.
and what's worse is, so what I'll do is I'll manually move my stop down, which that's not a terribly fine a problem, but what I'll do is I'll drop it too fast, and sometimes I'll just get wicked out on the stop, and it'll keep going.
Mhm.
But what's feeding this worse is there's a lot of times where I'll do that, and it will reverse on me, and I'll get triggered out, but then I'll just let the trading view indicator go, and I'll actually lose on that trade had I not done that. So it's like I'm getting a catch 22 there.
Yeah. Really, so what it's going to help you is getting a bigger picture on what this strategy is actually doing. So we need to zoom out and we need to view what you're doing over 100 trades, because right now your brain doesn't really have answers to questions that it needs to have answers to, and so it's going to fill that void with emotions. It's going to fill it with quick acting things, right? You're going to send this,
Mhm.
I've got to protect myself if I'm up, and it's just going to wick me out, and it's going to do all these things, right? And so if you're moving your stop, you need to have a reason that's proven of why you're moving your stop, not just because you feel like you should or you're nervous of giving something back. Your emotions telling you to do something are usually going to cause you to lose money. Your logic needs to be louder than your emotions, but the only way that's going to happen is if you have a proven reason of why you're doing this. And so if we can go back over 100 trades and actually measure out, I'm going to do 100 trades and I'm not going to move my stop. And I'm going to get my results over this. I'm going to figure out exactly what my win rate is. I'm going to figure out exactly what my average losing trade loses R wise,
Mhm.
right? Your risk. So if you're risking $100, do you average $50 loss? Do you average a $10 loss? Do you average a $100 loss or more, right?
Mhm.
And
Mhm.
then what's your average winning trade? Because until we know the answer to these questions, we're not really going to be able to figure out if that's hurting you or helping you, because it can go both scenarios. And like you've seen, you're going to experience both of those scenarios. You're going to have times where it wicks you out and you're going to have times where it saves you, right? So you're going to
Mhm.
have both of those frustrating moments. So how do you know which one to do? The answer to that is we've got to get more data. And so the first assignment that I'll have you do is go over as many of trades as you can, ideally hundreds. But if you only have 30 trades, go over 30 trades and we just need to back trade. So that's where you're going to go back and you're going to simulate previous setups and you're going to get
Mhm.
statistics off of those, right? And so it needs to be really scientific. Most people screw up their back trades because they will change the game halfway through the back trade. So you don't
Mhm.
really get good results. And so you'll do 50 trades. And then on like 52 trade, on the 52nd trade, you'll be like, what if I move my stop here? And then you start measuring off of that, right? It's like we need to do
Yeah.
100 trades sticking to the same system, only, 100 trades of not moving your stop. And you're going to write down and you're going to record down the date and time that you took that trade, the ticker that
Mhm.
it was on, and what the results were, win or lose. And then
Mhm.
what was the R result? Did you lose zero point 0.5 R's of what you risked? So if you risked $100, did you lose $50? Right?
Mhm.
You need to measure out the thing. And then if you did win, what are you winning? If you risked $100, are you making 100? Are you making 300? Are you making 50? and you're going to write down those stats for every single one of those trades. Once we have something to go off of that's concrete, now we're going to go back through those exact same trades. That's why I said write the date down and the time. You're going to go back through those exact same trades. You're going to go, I'm now going to move my stop quickly. And I'm going to compare both those data sets. You're going to get 100 not moving and 100 moving on the same trades. And now you have something concrete to go off of. And you're going to say, all right, were my results better or worse? Once you do that, you now have logic behind your decisions. And you can now logically overcome your emotions because you can tell your brain's going to say, move your stop. And you're going to say, nope, I made more money by not moving my stop, or vice versa, right? Whatever the outcome of that tends to be. So you've got to put more reason behind of what you're doing to silence the emotions. We all just try to overcome the emotions, but the emotions are there because we have triggers. The emotions are there because we also are lacking information. And whenever there's unknown, that's when the emotions really start punching us in the face. And trading is all about the unknown. We don't know if this trade is going to win or not. We don't know if this trade is going to go all the way to target, if it's going to go halfway and then reverse. Like there's all of these unknowns that we need to start putting answers behind. And so I'm going to go over those other answers here in those scenarios in just a second. But the first thing we've got to do is we've got to have a measured reason for every action we take. And that includes getting into the trade. So if your trades have kind of just been like, I feel like it's going to go here and I feel like it's going to go there, feelings are very hard to measure because it's not consistent. We need to have a very consistent setup. It could be whatever, whatever it is, whatever setup you have that tells you, okay, this condition's met, I go bullish. This condition's met, this conditions, I go bearish. And I'm risking this, and this is the reason why I have my stop here, etc. So if you have your entries, you have your plan, right? That's your written trading plan. It's something that's like you can measure, you can rinse and repeat so that you can get concrete answers. That's going to be step number one of your homework to do here, is to go back 100 trades and then send me the results. All right. This is what happens when I don't move my stop. This is what happened when I did move my stop quickly, and these were the results. Because you might find that moving your stop is fantastic. You might find that it's hurting you a ton because you're going to have both things happen. During 100 trades, you're going to have times where it wicks you out and goes all the way to target. You're also going to have times where it comes down, stops you out, and then continued, and you would have lost way more money. Both those scenarios are going to happen. What we need to figure out is, per your strategy, which one's hurting you and which one's helping you. Whenever it, wicks you out on those scenarios, how often does it actually run to target compared to go up a little bit and then run down? Like, so all of these tests are going to give you answers to that. So that's step number one, is starting with that. Once you have those answers, you're going to find that portion of trading is going to have way less emotions, and you'll know why you're doing what you're doing. Because again, we're zooming out. It's not about this one trade. Who cares? By the way, no matter what you decide to do, you're going to have times where it goes against you. So if you decide to not move your stop, there's going to be times where you're always losing when you're like, man, I could have lost way less. And if you do decide to move your stop, you're going to have lots of times where it wicks you out and goes all the way to target. And so you just have to accept it, because over 100 trades, it's something like that's going to happen. But statistically, what makes me more money in the long run? Does that make sense?
It makes total sense.
Cool. So the next thing that I want to look into when it comes to like emotions around losing is whatever is the trigger, right? Whatever that trigger is, there's a root cause behind why you're thinking that way, why you're living in that reality. Because professional traders, they don't focus so much of success on whether or not the trade won or lost. Everyone else does. Every professional trader that I've coached with, have taught me, that I've taught, that I've been around and talked to, the win and loss, the outcome of a trade is not the success measure. For everyone else, it is. And that's why we're so quick, or everyone else is so quick to go, I'm up a little bit, I want to lock it in so I don't lose money and I don't give up, I don't have a losing trade. And winning trades just feel so good, and losing trades just feel like I've done something wrong. I need to fix it. I need to undo this. I need to make back my money. And it causes a whole bunch of steamrolls of just really bad decisions. So what is your perspective behind losing on a trade? Like, what paradigm are you living in? What does losing on a trade mean to you?
I want to say, because I've tried trading in the past, before I got any kind of training, and I lost and then it made me stop trading completely. And then I got back into it because I really do love it, just in general. And then I lost again, a decent amount. And then the third time, I've been trying it. I think that's where it's coming from. It's like the scarcity mindset in a sense. It's like, yeah, I can't lose again,
Yeah.
you know?
Yeah. Losing is very easy to do. Winning is very hard to do. Like that, it's that type of mindset in your brain of, I don't win very often, so when I'm winning, I got to take advantage of that, and I lose all the time. Again, doing that back trade is going to answer that question, because you're going to start to realize that you win very, very often. It's just the losses have more of an emotional hit, so it feels like that's what happens more often. Because the average person, no matter what, like if I just had any random person, if I had a monkey, it doesn't matter, sit in front of the computer and just press buttons. If I had a toddler stand on my keyboard, it's going to pretty much work out to about a 40 to a 55% win rate, pretty much across the board. In fact, most traders actually average a pretty high win rate, like 60 to 65%. But they do that because they constantly take their profits as soon as they're profitable. And again, that's not a bad thing. Yeah. So you can have a high win rate, but 90% of people are not profitable. This is circling back around to professional traders don't care so much about the win and the loss. They care about the risk. They care about that number that they're risking. How much money do I lose if I'm wrong? If I've got a 50-50 shot, if I got a 50% win rate, let's just go right down the middle. How am I going to be successful in trading? I'm going to lose on 50 trades and I'm going to win on 50 trades. Instead of looking at it as I've won, like it's just a W. If you look at the big picture, if I risk $100 on a trade, and so I'm losing $100 every time I'm wrong, so those 50 trades I lose $100. And then whenever I'm right, I average $25 when I'm right of wins. Are you going forward or are you going backwards over 100 trades? You're going backwards,
For
but
sure.
yet it feels really good for us because at least I didn't lose on that one trade. The one trade
That
doesn't
makes sense.
matter, right? The only thing that matters is math whenever you're doing directional trades. Now, if you're selling options and new stuff like that can change some stuff, but whenever you're going directionally, you're buying anything, the only thing that matters is I need to make more than what I'm risking. So I don't care if this trade is up $50 and then goes back and loses. I don't care. What I care about is if the trade agrees with me, I win big. I make more than what I'm risking. So the 50 trades that I actually win on, I'm making $200, $300, $400, $500 on each trade. And the 50 trades that I lose on, I'm losing $100 or less, or whatever you're $1,000, whatever you're risking, $100,000. It doesn't matter. This is the same math. You need to be making at least twice the amount on average on your winning trades than you lose on your losing trades. That's the shift in mindset that I want you to have and start to see. Success is not winning on a trade. Success is winning twice the amount that you would risk if you would have lost. That's the only way to go forward in trading. Everything else, you're spinning your wheels or you're going backwards. And so that, again, knowing that truth, now you can start to look at a trade and being like, I'm not scared to give up this $50 because $50 does nothing for me. If I win $50, but I'm risking $100 to make that 50, I need to have a very high win rate. Like you can make that work, but I need to be like in an 80, 85% win rate to make that work. And most people aren't that. And if they are, they have one or two trades a month where they end up losing $1,000 because they weren't willing to get out of their $100 risk. And so it just undoes everything, right? So
Sense.
it's just shifting that perspective, what the real meaning of losing on a trade means. Losing on a trade, as long as I lost my R or less, I'm smiling because I know I did my job. I can't control if this trade wins or loses. This is just one drop in the bucket of 100 trades. And so if I have my setup and the markets go against my setup, my only job is to lose small. And losing small is what you risked or less, right? And then if the markets agree with me, my emotions are saying take the money.
Hmm.
But right? But
Yep.
logically, I know my job is to win big. My job is to make more than what I'm risking. We would lose $100 at our stop loss. I know I need to make $200 if the markets agree with me. I need to let this thing run. Let me give you some examples now to help you figure out a little bit more of how to do this. If you understand price action, you're going to be able to start understanding a little bit more of how to know you're wrong so that you can lose small. I don't want to just move my stop up based on my P&L to be able to lose small. I want to make sure that I am moving my stop because the charts are telling me if I'm in bullish, the charts are telling me it's no longer bullish if it gets across this spot. Most people are getting wicked out real quick because their stop is too close. It's not in a place. It's not in a place where you're wrong. It's in a place where your risk would make you the most money. If we were to go bullish, most people would play this candle just like this because it gives them the highest risk reward. So if we're looking at this risk reward ratio right there, you have 2, right?
Hmm.
And so a lot of people are like, I'm going to put my stop right here because I can get 4 risk to reward right there at that same target. That's fine if it works, but the markets are designed to whip everybody out that's not understanding this price action concept. So you have that, and I'm going to show you where you need to be putting your stops, but you have that, but you also need to combine this with sentiment. All right. So right now, this is very, very, I've gone back just a few days on SPY. This is very, very sideways. And we just put in a strong buying candle with a long lower wick here at the support. This should bounce back up, right? Here's our bottom and here's our top of this sideways channel.
Yep.
I would expect it to start heading higher. So a lot of bulls are starting to get in here. What we need to do is we need to put ourselves into the shoes of people, right? If you just bought right here and this thing put in a candle like this, what are most people doing? They're getting in here and they're putting their stop right here, right? So
Yep.
if we're thinking about how the markets are not going to pay out a whole lot, they're going to pay out 10% of the people that are in this trade. So we don't want to be like everyone else. I'm going to sit back and I'm going to let this candle form and actually let a few more candles come in. So let's fast forward this. And it's trying, it's boom. This is everybody's stop getting stopped out that was trying to buy this support. So now we're asking ourselves what should happen. The bears just took over control. So now a retest back to this area should have a lot of bears in it to push us back down. So if we wanted to go bearish on this, the entry would be about right there. And our stop, again, most people would put their stop in really tight. Their stop needs to be about up there. All right. So now my 2-to-1 risk reward would get me there. Enter here, come down to here. Again, does it matter if we are right or wrong? No.
No.
The only thing that matters is if I'm wrong, I get out here or smaller. And if I'm right, I get out here or lower on this short position. Now, there's a lot of things telling me not to go short here. Like we're oversold on the RSI. We're right on the bottom side of this big trend line. Like there's a lot of things telling me, hey, and plus go to a bigger time frame. It's probably just a pullback. But still, the bulls had their chance. The sentiment is telling me it's time to go bearish. So it comes up and we get filled right here on this candle. What should happen in this area? Bears
Then
should
the bear should come back down.
Yeah, we should
Yep.
have strong bear moves because the bears are clearly taking over control. There we go. The bears are trying. The bears are trying, and it's not happening. Strong close back up above it, back above some EMAs. This would tell me I'm probably going to go ahead and close out of half of my position for a smaller loss. Remember, I would lose, let's say, $100 right here at my stop loss right there. And this thing is starting to bounce back up. I'm going to go ahead and exit half my position. And until this can actually start to break this trend line and actually start to work, I won't add back in. I want to make sure that this trade's working before I add back in. So that's one way to reduce risk, right? But let's say even if you didn't do that, I know I just need to lose right here. The bears should rotate down. So it's not rotating down. Not rotating down. It should go lower. Boom. All right. I think I went too far. We just got stopped out.
Yep.
Right? So we just lost on a trade. We exited half here and the other half there. So we ended up losing, let's say probably 0.7 R, give or take. It's probably more like 0.5, but let's just go ahead and say 0.7 R. So we lost 70 bucks out of our 100 risk. Did we succeed as a trader on this trade?
You lost less than an hour, yes.
Yes. Check. That is the only thing that we need to do. Most people would be like, man, what happened? What did I do wrong? And then they have way too much emotions here. And all they do is think emotionally, and then they start to double down on bad emotional decisions, where what we need to do is we need to think logically. This is a new day now, right? The next day just happened. We know that this thing was rampaging bullish, and now it just pulled right back into my buying spot. How do I know that this is bullish? Because the bears had their chance, and they just gave it right back up, and you can see the amount of bears that just got squeezed. Here's my chance to go bullish. I am going to get in right here, and I'm going to not place my stop here at the bottom side of this hammer. I'm actually going to place it below the higher low down here.
Okay? Makes sense.
Give myself some room. Does that hurt my risk reward? Sure. But it hurts a lot less than getting wicked out and then have it go to target. So put your stop below the higher lows. The markets are going to move like this, right?
The S curve.
Yep, and that S curve. It's going to go like this. This is where the bulls are no longer in control. So even if you get a pullback and you get a hammer right here, don't put your stop here and your entry here. Put your stop below the actual structure of the price action, no matter what time frame you're on. And then on the bear side of things, it's the same story, right? If you're getting in here, your stop needs to go up above that lower high and give it some cushion, knowing that the algos are hunting these areas, right? So if we start to play this game here, and I go long here with this, understanding the sentiment, because we put ourselves in the people's shoes. Yes, we lost 0.7 Rs here, but we have 2 Rs worth of risk right here, and we understand that the momentum is pretty dang bullish. And guess what? If we were to lose, I can do a pretty good job of losing small. So let's fast forward this a little bit here and see if this thing is going to, there we go. We're starting to make our move. Now we're starting to get some bullish structure here. So I can now move my stop to right here because the charts just told me we should not get below this.
I see.
So you're letting the price action tell you when to move your stop. So in order to do that, you've got to sit here and go, I'm okay to lose 1 R. When this thing is coming down and all you want to do is move your stop up, and then you get wicked out right there just to go because you're moving your stop too quick, let it actually bounce and complete an S curve before you move your stop. Now that it bounced, now you can move your stop. And now you're staying in this game. The bulls are here, so here we go. So now we have another S curve coming in through here. I can now move my stop to here. I have a guaranteed winning trade now because I'm letting the price action tell me. If you're enjoying this content, I do weekly group coaching every Wednesday in our lifetime community. Our lifetime community costs less than one of your losing trades, most likely. It's just a one-time charge of $97 and you're in for life. And you can come hang out with me every single week on Wednesday and trade with me, ask me questions, look over charts. I can teach you more technical analysis, and we go over our strategies and our setups every single Wednesday. You will also have access to our private Slack community as part of the lifetime membership, so you can see trades, you can post charts, get your questions answered, chat with me on a daily basis if you'd like, and get closer to your goals in trading. So go ahead and check the links down below in the description, or I also have a QR code up here on the screen. Scan that, and that'll bring you into our lifetime membership and a chance to join and be part of our trading community so that we can help you hit your goals in trading and get the life that you're after. Now I can move my stop here. So it's not like, again, most people would see a big move up and then they would immediately move their stop up and it would come down and stop them out and then continue to go. This is how you can actually let it go, is by understanding where to place your stop. People think the markets are out hunting everything. Are there situations? Yeah. 90% of the time, people are just moving their stop too quick, or they're not moving their stop into the right location. So I would move my stop here only after we get this big bull bounce. Now my stop's there. Now I have a guaranteed 1 R trade, and I can see if this thing's going to run to target. Later on, finally ran to target. Even if, and I probably put this one a little bit too close, but even if I would have got trailed out right there,
it would have been a win.
It still would have been a win. And so that's the difference behind trailing your stop for a reason and not. There's another trade right here that would have been an absolute ring dinger. So here's 2Rs. There's your 2R trade right there. That'd have been another setup. So you would have made probably about 1R on that one. So you'd have made back your other trade on that, and then your new high coming in through here, retest, get in off of this 10 EMA is your next setup, having your stop in the right location, not just right underneath the 10, and it easily ran to 2Rs. In fact, that's 2.3. Like your 2R would have been hit in 10 minutes. There's your
Yeah, that'd been all right.
yeah, there's your 2.7R profit day right there. And again, let it come back and trail you out because the price action's telling you so. And again, this should have been very bearish. This stopped out all your bulls. So again, when this comes in strong and makes a new high again, now I'm going sentiment wise, we're still here to play because this just wicked everybody out. Retest, there's your entry, and there's your easy win right there. Hopefully, again, just it gives you a little bit more structure to help you go, look, you're not that far off. Like you're 99% of the way there. If you just given yourself a little bit more reason to feel logic in where void is at, right? Where the unknown is at, you just need to get some more numbers, figure out what's working and what's not in your strategy and dial it in, and then have that understanding that it's not going to be perfect. Your strategy is going to be halfway correct. As long as your strategy set you up to lose small and to win big, that's all that matters. Right?
Yeah, I was definitely moving the stop loss on the P&L for sure.
Yeah, that's it. We solve that one movement of the stop, and you're going to start seeing your results explode because that's all that is. It's the difference between break-even trading and profitable trading is just a thin line. That's all it is. And it's usually people are just 1 or 2 steps away from profitability. They just need, again, like I had to figure all this out on my own. I didn't have someone there to do this. And so I'm sitting here just losing so much money. And what I should have done was just invested some money in RLT earlier. Like I was a product of RLT, but I wish I'd have done this earlier because it was finally sitting in a live session where one of the instructors was like, this is why you don't move your stop. That I'm like, holy crap. Like that was the same thing for me. And then also my identity of what losing meant. Like I thought if I lost on a trade, if I lost money, it'd be so hard to make back. And you can see from that example right there, you're going to lose on half of them. Just lose small. And then when you're in a trade, give that the best chance to win big. I would much rather get trailed out trying to let this thing win big than to just exit and let it run all the way to target without me. Right?
Yeah,
so
that's true.
Changing that little bit of perspective and just seeing the big picture is going to take the emotions off, but it's really what's going to give you the results in the end. And that's what we're after, because one trade doesn't matter. This one trade of losing, I don't need to all of a sudden try to make back my money. I just need to stick to my strategy, stick to my plan. And the way that I know how to do that is because I've convinced my brain that it works through hundreds and hundreds of back trades following that system.
That makes a lot of sense.
Yeah. You're there, man. You're one move away from profits. That's it. Consistent profits. So
yeah, that's been a long time coming, but it's good to hear.
You're there, man. Message me, let me know how that homework goes. And I'm excited to hear back from your results of how your trading's changed and the results coming in from these new ways of approaching it.
For sure. I appreciate it so much. Oh, and I just exited that Tesla credit spread my first credit spread since doing your part 1.
Nice.
Yeah.
Nice. Now's a good little winner. That's just easy money, right? If you're throwing like 5 or 10 contracts on that, that's anywhere from like what, $200 to $600. It's like that's paying for all your education right there, and you can take that money, roll it back in, and just keep making more money off of it. It's really cool.
That's the plan. That is the plan.
Cool. Mike, brother, thanks for your time, brother. And let me know if you have any other questions that come up or any other struggles. But go through the homework, take the time to do the back testing, and then send me those results, and we'll go from there.
Will do. Appreciate it so much. Thank you so much.
My pleasure, brother.